good day, and for those on the East Coast, good night. This is the first of what we hope to be many communications with you through the email on a more timely basis, giving you current information and current insight as to what we're looking at. I hope you like it. Let us know what you really think. Give us a call. Our strategy for investing, dating back to January 2nd, to be exact, of 2013, and coming from a tax decision made by the politicians in Washington, gave corporate dividends a preferential handling insofar as tax rates, and that was our first thrust into a bullish stance on equities. It's been 16 months, and we've stayed the course, and we still believe that there is a lot of money, that equities are under-owned, and a lot of money will be seeking good, solid common stocks. So we remain in place. A look at the economy. We're coming off of a rather slow first quarter because of weather. Frankly, snowstorms don't engender a lot of economic work. So the weather having been bad squeezed the first quarter growth into the second quarter, and we're seeing signs through Purchasing Manager Index, hotel occupancies, and a lot of other statistics that we look at. We're seeing signs that the second quarter is going to pick up significantly. On the monetary front, we look at our deficit. What was a $1.4 trillion deficit in the United States is down to about a $480 billion, which is still a lot. But a $480 billion level is much more manageable. And the Federal Reserve is still printing money at a rate in excess of that. So we can see the Federal Reserve cut further into their printing mechanism, and this is positive. Looking at common stock selection, large is better than small. They're performing better. Companies that pay dividends are performing better than companies that don't. Value companies with reasonable price-earnings ratios at, quote, cheaper prices are doing a lot better than growth stocks that sell at higher multiples. So if you look at your portfolio, most of our stock selections are right in stride with what's happening in the market. So we're comfortable with this, and we want to continue on. And our message is, so far so good. Let's stay the course. One fly in the ointment, however, and we're starting to look at it very closely, is the dollar is not behaving as it should. We would think that a dollar would be a lot stronger with this kind of an environment compared to other currencies in the rest of the world. So we've got to look out on what is causing this dollar, and there are a lot of different probabilities with that. We don't know what it is, but we'll let you know as soon as we figure it out. But that is one thing that's giving us a little bit of concern. But in the meantime, plan to stay the course as the market reaches the new high for the Dow Jones, not the NASDAQ, not the over-the-counter market, but the Dow Jones hitting a new high, hits us right in stride. So enjoy the ride. We will be in touch.